What's happening, boys and girls, ladies and gentlemen? This is the Flow Show coming to you live from Stock Island, Florida, near the hurricane Straza. Boy, I'm rooting for you. I think you're going to be okay where you are, but we got a lot of friends in Central Florida, in the Central Western Coast, that are not looking so good. In fact, we have to reschedule a podcast that we got coming up due to the location of that hurricane. So, man, I hope you're ready. It's going to be a wild couple of nights.
All you can say about Central Florida right now is thoughts and prayers. I don't know if anybody has had such a bad streak in terms of weather and the history of weather. It's just crazy the way that they're getting two in a row like this. That's absolutely terrible.
It's a bad streak
I
that's
live.
about to get a lot worse, which is not cool, not good.
No, it's not looking good. This is a really large storm system, which is different. And for me, I was just saying, off air, living in the Florida Keys, it doesn't take much. We're not even on hurricane watch. We're still on tropical storm watch right now. Hopefully it stays that way. But, it doesn't take much to wipe us off the map. If we caught the eye of a category 5, I don't really want to know what that would look like. So times like these, we're hoping for the best. We're bunkering down here. We'll probably, be just fine. I got a little power backup and we got a resort across the street that we're prepared to go to if we need to.
Very good. Well, look, there might be some repairs in your future, and if that's
Yeah.
the case, we need to make some money. So, you got any good trade ideas that we could get into to ride out this storm?
You know, Sean, risk appetite continues to look, if not good, fine. I think more and more offensive stocks, risk on stocks are working better and better. I have ARC up here. I just want to show the shape of this. This is kind of the pond that we keep fishing in. And I think the reason for that has less to do with making a risk on call and actually more to do with making a call on stage one reversals, or in other words, the freshest or newest trend reversal patterns. So
Let's
this is the
let's
ARC
stick with the
next.
nomenclature of the moment. Let's call this a Cat 1 reversal.
Yes, I love that. I love that. So there's a new storm coming here, particularly for ARC bulls, where you have a textbook, rounding bottom here. A lot of people would look at this and see an inverse head and shoulders. That's perfect. The bottom line is it's a textbook reversal pattern that, moves right into a little range here, a textbook rectangle pattern, which is, a common continuation pattern. And then we would earn the direction of the underlying trend, which I could illustrate here with a moving average. Just put the 200-day moving average on to show that the primary trend or the long-term trend is up and to the right. So we would, anticipate that something like this would resolve higher, not lower. And then in that same conversation, we have some really fresh reversals in this universe. So here's SoFi. See if any of these tickle your fancy. I'm going to throw like 4 or 5 at you right now.
Okay.
Leave the 200-day moving average on. This is SoFi. We could draw this up in a similar way that like we just did with that ARC chart. It's probably a pretty big holding. You could do a little base and then another base, right? Draw some lines on here. We're big fans of the VWAP, as anybody who's watching probably knows. If we were to drop a VWAP on the SoFi here from the base highs, just getting above it, I think that's set up nicely. I think these are longer term setups, Sean, in terms of option strategies. Zillow Group. Interest rates have been rallying for the past 2 weeks. Zillow Group coming out of a textbook trend reversal. Let's clean this chart up. There's the base. And with this little rally in interest rates, this one, think of this as a housing stock. With this little rally in rates, you're getting a super clean retest of this base level here today. So I like Zillow on this pullback.
Zillow's a good candidate with that pullback. I mean, if you the type of trader that likes to buy on pullbacks, you got what you want happening right now.
Perfect. And I love buying weakness in the context of uptrends. This is a brand new uptrend. Again, this primary trend reversal just completed. This is the first pullback into it. You're getting really, a perfect retest of this base breakout level. Let me give you one more. Restaurant software. Toast. I think you can also now they have like an online like a food delivery directory too. So this is Toast. Speaking of fresh trend reversals, this looks like some of the best charts right now. Let's throw a line
Ooh.
on it. Look at
I
that.
think I like this chart even more than Zillow.
It's going. So I don't know in terms of optionability. That might matter for these names. But
Uh,
Sean, this
Toast
is the same
Toast
thing.
appears to have plenty of liquidity. We could trade Toast.
Zillow probably does too.
Zillow does as well, yeah.
And doesn't this remind you of Coupang? I think we talked about Coupang on here a couple weeks back.
Yeah, we're in it.
So we're in the Coupang. Was this not the same pattern, right? Not long ago. That's what we're trying to do here.
Yeah.
So you want
Well, I mean, of the names that you just discussed, I like two of them, but for two very different reasons. I like the Zillow because I like buying it on a pullback, but sometimes pullbacks aren't pullbacks. That's it. That's it, right?
Yep.
Whereas, and then I like Toast because I just really like that setup. I like breaking out of that long base.
Yep.
I think I like Toast a little better here. I could be convinced either way, but I think I like Toast a little better.
The relative trend, there's nothing there. I think you want the cleaner setup with the more liquid options market, really. And they're both pretty damn clean. Toast has been a little bit stronger here in the very near term, right? Zillow has had a pretty hard pullback over the course of the last few weeks. Toast has been pretty high and tight.
It's tough. I mean, look, maybe we just trade both of them.
Why don't we do both? Seriously,
Yeah, I think we
right?
can do both.
So what you do in this situation, guys, is say you were planning to deploy $1,000 or $100 on this idea. Instead, you do 500 on each. Bang.
Boom. I like it. All right. So then let's quickly go through a couple trade ideas for each one. Um, let's start with Toast since you have that up on the screen. I'm looking at my screen. We don't need to bring it up, Gene, but I'm looking at my chart here, and the implied volatility is kind of in the middle of the road. I suspect that's because we have earnings up in the next month or so for
I
Toast.
see earnings first week of November.
Yep, that doesn't surprise me. So I think in both of these plays, Straza, I think we go a little further out in time for a couple of reasons. Number one, these are reversals, right? And reversals, they need time. This isn't like just a fresh all-time highs breakout. These are reversals. So these may need some time. So I think the further out we go, the better. That also minimizes the effect of any earnings downdraft that catches us by surprise. So with Toast, I'm thinking here, boy. So
Sean, yeah,
here's an interesting thing. The strike that's closest to 25 delta that's on offer right now in March is the
35.
40.
Damn.
Yeah. But they cost like $1. So maybe the way we do it is we do a bull call spread. We buy the 30s and sell the 40s. We could get that for about let's see. We could get that for about 250. I like that. 4 to 1, potentially make 4 to 1 on our money.
Yeah.
I don't think we get too hurt too badly if we have a earnings disaster. I mean, disaster maybe we do, but if we get an earnings downdraft, don't think
And
we get hurt.
Sean, yeah. No, I'm with you. First of all, if they have bad earnings, the trade's probably blown. Let's be honest, right? Back into the box, and then that resolution probably takes a lot longer than we're planning on. However, a stock like this could beat earnings and be up 20% easily. Then we're halfway to in the money on a trade like this. I think context always matters with something like this. So I just zoomed out and I looked at the reaction rally that we had off the Q4 lows last year. This thing was up 80% from mid-November to early March. So it can make a move. It can make the kind of move that we need for these options to pay.
Yeah.
It's just the trend needs to work in our direction. I've just highlighted the Toast chart in red to show what Sean's talking about. You tend to see slow and sloppy price action coming out of these reversal patterns. But what I like about this one, actually both of these, Sean, Zillow also, is we ran up to the base breakout level and then we went straight sideways at it since February of this year. So for 7-8 months now, it's been slow and sloppy at the breakout level. So maybe that period is behind us and we're ready for that reaction leg higher.
Okay. I'm sorry. I'm making little notes here in my notepad. Um, okay. So I like toast with a bull call spread. I feel like we can sell those 40 calls and get about a buck for them. We're talking March options.
Mhm.
And we'll be very happy if this thing goes to 40 bucks between now and March. We're risking our max loss in this is $2.50. That's if the spread goes to zero. And it's, I think, unless we get, a really shocking earnings report, then I think it's very unlikely we would lose 100% on this investment. If we're wrong, I'll probably look to pull the plug, Straz, on this if the spread loses 50% of its value. So I'm paying 250 for it today. Unless we get an earnings disaster, then I think we have a good chance of getting out for a buck 25 if we're wrong. So really, if you think about it, Straza, we could be risking as little as $1.25 to make as much as 750. I like those risk reward odds. I like that.
That's the kind of risk reward that we want, and this is the perfect chart pattern. So
Yep.
I love that. Let's do the same thing with Zillow.
Yeah, that's what I'm thinking. I'm bringing up Zillow now. We also want to go out far. Let's also do May. Why not? Let's just keep it in May, because that gives us what's that? 7 months. I mean, that's a good. That's a
It's a
good.
lot of time for
That's a
a
lot of time.
pattern that has been, I don't know, printing for 2.5 years now in the case of Zillow.
Yep. You know what? Let's go in Zillow's case. Let's do June, and here's why. It's 1 month further out, but there appears to be a lot more open interest in June. I'm thinking these options have been tradable for longer than these May ones. These May ones may have just been listed recently.
I'm all about
So
that liquidity. And Sean, also, it's important to point out we have several earnings reports that can act as catalysts because it might seem like, ooh, 40% in Toast is a lot. We're probably going to need another 40, 50% in Zillow for these to pay. You got 2 or 3 earnings reports between now and expiration. That's not that hard.
yeah. No, I like this. And I like the bull call spread, same trade in Zillow, but I like it even better because there's a lot more juice at some of these further out of the money calls, which
Yeah.
is nice. So let's say we're trading at 62 and change right now. Let's say we bought the 65 calls and we sold, I mean, the 65 calls right now are trading for about 9.7, let's call it 970. If we bought the 80, if we sold the 85 calls, so that's 20 bucks higher, we're going to get, we're going to get more than 350 for those. So we could buy this $20 wide bull call spread for, let's call it $6. Um, I like that. I like that a lot, actually.
100%.
Um, and same story with Toast. If we get an earnings disaster, that's really the only way we're going to take a full loss on this trade. I'll look to exit it if it loses half of its value, and I think that'll be a pretty reasonable expectation. They'll be able to get out for half as long as we don't get one of those crazy earnings gaps, which could happen, and we have to be aware of that. So we have to size position being fully prepared to lose 100%. I mean, hopefully we don't, and I don't think we will, but we have to be prepared for that. So always mind your position sizing.
Something like Zillow set up like this, right? We're talking about this as what a perfect chart setup. Well, here's what could also happen. We end up calling this a big oops and a failed breakout. And we're back in the box. And if that's to happen, then you're right, Sean. These trades are probably worthless pretty quickly. And that
Yeah.
could happen on the next earnings report in a month. The
And
other thing that can happen is this is a brand new trend reversal. The path of least resistance is now higher, and we're buying ourselves 7 months to see that upside and to watch these charts climb up the right-hand side of the space.
Strazik, here's the thing, and you know this and I know this, but maybe some of the viewers don't know this. Both of these trades have a high probability of failure. It's very likely we will lose on these trades. I'm not saying we're going to lose 100%, but it's very likely we will lose. We know that going in. That's okay because our risks are defined. We're not risking a whole lot of money of our portfolio. But when we get these trades right, we don't need to get all of them right. We don't even need to get half of them right. If we have at least the style I trade and the style that we do in All Star Options, even if we just get 40% hit rate or 35% hit rate or a 30% hit rate, even we could still be net winners over the long run. It's all about having those big winners and keeping those losses small. That is the magic secret sauce right there.
100%. Find a risk number that is manageable for you, right? And doesn't blow your account. and then find a risk reward equation using that level of risk that is incredibly favorable. And on something like Zillow, the price target for this chart pattern is north of 200. I'm not saying we're going to get there by the time that we expire, but God forbid, if we get anywhere close to it, this will be a great trade. So that's what we're trying to do.
And you know, the nice thing about this trade, and you know, it's not something I do a whole lot, but I know traders that do this, and it's nothing wrong with it. But it call spread, and whether it's in Zillow or anything else, and you know, you're long the slightly out of the money call, and you're short a further out of the money call, and if that trade starts working for you in a hurry, there's nothing wrong with rolling that short call to a higher strike. You're going to pay a little bit of money to do that, but that increases your potential win. It's like adding to a winner, right? Stock traders add to winners, futures traders add to winners. This is how an options trader can add to a winner. They can roll that short strike higher, giving them higher potential gains. Now, of course, when you do that, you add to your potential risk, but now you're adding to a trade that's winning and you've got some built-in profits. That's trading from a position of strength, and that's a good thing. All right. I think we did good work here.
Yeah, I like this.
I think we did good work here. Hey, listen, I'm really, really hoping that we're going to see you on the morning show tomorrow and Thursday and Friday because everything's cool out there in the Keys.
I hope so too, Sean. We'll see.
All right, everybody. Thanks for tuning into the Flow Show. If I'm a betting man, I'm going to bet that we're going to be back next week. No problem. No problem.
We should be good by next week. All right, everybody.
All right, everybody. We'll see you on the morning show tomorrow. Take care. Be safe. All of our friends in Florida. We got a lot of friends out there. Be safe. Get the hell out of Dodge if you need to, please. Take care. We'll see you next time.